A prolonged housing crisis in China having a knock-on effect on the rest of the economy.
There's a road that speaks volumes about the state of the Chinese economy. A multi-billion yuan expressway, one side unfinished and abandoned, a symbol of a system that's stuttering.
I know that China is doing very poorly right now.
China could be facing an extended economic downturn.
China's economy is struggling because Chinese citizens are just not spending. In China, household spending makes up less than 40% of GDP. In the US, it's 70%. This low spending makes China dependent on trade, government spending, and investment. And all of those three are at risk right now. The CCP is getting so desperate that it's subsidizing things like microwaves and dishwashers just to get people to spend money. But it's not working. And as we'll cover later in this video, this spending problem is just the tip of the iceberg. Underneath it lies a $10 trillion debt crisis, a real estate bubble, and an economic model built on a house of cards. These problems could trigger a collapse the CCP isn't ready for. And it all starts with low spending. The big reason for this is that Chinese citizens believe in saving more than spending. For every 100 yuan they earn, they save 32. This is also called the household savings rate. Recently, total household savings in China hit a record high of 140 trillion yuan, or about 19 trillion US dollars. China as a whole has more money sitting in bank accounts than the entire country earns in a year. That's the polar opposite of America, where people believe in spending and then spending some more. The US household savings rate varies from month to month, but right now it's about 4%. So for every $100 earned, only $4 goes into a savings account. And for decades, the American model has worked pretty well. If everyone spends more, there's more demand, and the economy grows. This unshakable consumer market is one of the reasons why America makes up a third of global consumption, despite only having 4% of the global population. But China just can't manage to copy this model. One of the reasons for this is a historical one. In recent memory, China has suffered famines, widespread poverty combined with terrible government overreach. All thanks to this guy, Mao Zedong. That kind of suffering has had an impact on people's trust in the future, and on how much they save. Elderly people still remember the time when Mao Zedong just took people's assets away, like it was nothing. During his so-called Great Leap Forward, up to 55 million people died due to food shortages. And that was only about 65 years ago. By the way, famines are not uncommon in Chinese history. In the 20th century alone, there have been 7. That's why Chinese culture says people should save their money, because it can help you to survive such a crisis. One of the quotes of Confucius, a key figure in Chinese culture, is that when prosperity comes, do not use all of it. And prosperity for China only arrived about 3 decades ago, when Deng Xiaoping opened up the economy. Nowadays, most people in China receive a paycheck every month, and they're supposed to go and buy goods and services with this. But understandably, there's not a lot of trust in the new system yet, and they're right. As we'll cover later, Xi Jinping is already undoing everything that helped the Chinese economy grow. Now, the CCP's 50-cent army definitely isn't gonna like this one, so it's entirely up to you to help us spread the truth. If you can please take a second and hit that like and subscribe button down below, it helps out our work tremendously. Thank you. It's not the only reason for saving though, especially for young people who were born during this time of prosperity. As it turns out, they also don't spend a lot. One of the reasons is that saving is the best way to get ahead in Chinese society. People's social status depends on how much they own. Having a home in a major city like Beijing, Shanghai, or Shenzhen is pretty much the biggest financial achievement you can dream of in China. And if you manage to buy multiple properties, then you've really made it. Also, the cultural norm in China is that you need to own a home before you can get married. You can't just rent it. The only problem is that properties in Chinese cities have gotten ridiculously expensive. In Shanghai, house prices are 50 times annual average income. In Shenzhen, Guangzhou, and Beijing, it's more than 30 times income. Pretty crazy, right? Needless to say, most Chinese people can't afford this because the payments on the mortgage would be too high. So they choose to slowly save up money one day to be able to buy, which is one of the reasons for this high savings rate even among young people. On top of this housing issue, having some extra money saved up in a bank account is necessary in China. Despite the CCP preaching about its socialist ideas, social services in China are actually not that great. The pension system is one of the biggest examples of this. If you're lucky, you're part of the urban pension system where you get the payout of $460. That's still below the cost of living in the cities, though. And 2/3 of people in China don't even get this. Their pension payout is less than $25 a month, so they get close to nothing. As a result, many Chinese people have to save up for retirement by themselves, and they start to do this at a very young age. And the people that are going to retire in 10 years from now or later, well, they have an even bigger problem. That's because the Chinese pension system is going to run out of money by 2035 due to China's aging crisis. That means more taxes for workers and less pension payouts for retirees. For the people that are aware of this, it's a big reason for saving more money on their own. And on a family level, the aging crisis also has an impact. Many Chinese parents only have one child, so they need to save up extra money. In Chinese culture, children often take care of their parents when they get older. But with only one child, that's too big of a burden. And these savings aren't only for retirement, but also cover healthcare costs. Officially, China has a public healthcare system, with 96% of people having national insurance. But is everyone covered? The answer is short, no. In the big cities, people usually have access to good public hospitals. But in smaller cities and rural areas, public healthcare is terrible. This forces many people to turn to private hospitals where they have to pay out of pocket with no public insurance. Remember, around 40% of the Chinese population lives in rural villages. That's more than 500 million people. Especially in rural areas and smaller cities, Chinese people avoid doctor appointments as much as possible. And even when people have access to public hospitals, there's still a problem. Many hospitals have a pay first, claim later policy, which forces people to have money at hand. And sometimes insurance claims simply get rejected, which is a big problem for people without savings. Now, these problems of trust in the economy, expensive housing, and saving for retirement and healthcare have all been ongoing for a very long time. But recent developments have made the high savings and low spending problem even worse. Ever since 2022, consumer confidence in China has been at record lows. That's because the job market in China is in a lot of trouble right now, with youth unemployment in the double digits, and overall unemployment rising at a rapid rate. Meanwhile, property prices are falling rapidly in China's housing crisis. Home prices have fallen back to 2017 levels, meaning that many homeowners have lost a big part of their wealth. Now, whenever there are problems like these in the economy, people start saving more because they don't know how much they'll earn in the future. This also happens in other countries whenever there's a crisis. In 2020 and early 2021, the US household savings rate jumped, and at the peak, US households were saving 32% of their income. The difference is that confidence in the US has returned by now. But in China, consumer confidence has been low for 3 years now. This has to do with other broken aspects of the Chinese economy, like the housing market, state-owned enterprises, and government policy that we'll cover later. But for now, let's go back to the savings problems in China, because it's worth looking at something else that sets China apart from other countries. Saving money in China works very differently than in other countries. In the US, it's possible to actually make money using savings. More than 60% of Americans own stocks, though mostly through retirement accounts like 401ks and IRAs. And over time, these stocks tend to grow a lot. But in China, even legendary investors like Warren Buffett would struggle. The SSE Composite Index, a mix of some of China's biggest stocks, has not been a great place to invest. There's barely been any long-term growth, and there's a lot of volatility. So in China, only around 220 million people, or about 16% of the population, invest in stocks. The rest put their savings in bank deposits, gold, and real estate. These options are safer, but they don't grow as much as the stock market does in the US. This means that you have to save way more just to get the same result. To get an idea of how big the effect of this is, it's best to look at an example. The average Chinese citizen has about 41,000 yuan, or $5,700 a year in disposable income. They save about 32% of this, so about 1,800 yuan, or $150 a month. Now, let's say that they get about 1.5% interest a year in their savings, which is about what banks in China give right now. With 30 years of saving $150 a month, you end up with less than $70,000. Compare that to the US, where you can get about 10% a year with stocks, give or take. With that return, just $150 a month over 30 years will give you nearly $300,000. That's the big miracle of compound interest. But unfortunately, it doesn't really exist in China. It's one of the biggest reasons why people in China save 32%, while people in the US only save 4% of their income. In the end, the different return on savings even things out a bit. Now, if we dig even deeper, we'll find even more shocking problems with the Chinese economy. You see, the reason why people can't invest their savings is the same reason why the Chinese economy is struggling. High savings don't actually have to be a problem if investment goes right. When savings are used to build up the economy and create long-term wealth, it's actually a positive thing. But in China, the capital markets are broken. That's because investment is happening at state directives. Every year, Xi Jinping sets a growth target for the Chinese economy. For 2025, it's at 5%, just like it was in 2024, 2023, 2022, on and on. The CCP also outlines the strategic sectors where they want more growth, like electric vehicles and semiconductors. And they can actually decide where a lot of the money goes. The 4 largest banks in China are all majority state-owned. And they're also the 4 biggest banks in the world, by the way. These banks are the Industrial and Commercial Bank of China, with $6.3 trillion in assets, the Agricultural Bank of China, with $5.6 trillion, the China Construction Bank, with $5.4 trillion, and the Bank of China, with $4.6 trillion. They make JP Morgan Chase with $4 trillion look like a small player. Now, the Chinese banks have thousands of branches across China, and the majority of household savings go into their accounts. The problem is that these banks listen to what the CCP wants. When the CCP wants more real estate, they give cheap loans to real estate developers. When they want more factories, they give cheap loans to manufacturers. And when they want more infrastructure, they give cheap loans to infrastructure developers. In turn, a lot of these companies that take the loans are state-owned. 1/4 of the Chinese economy is still controlled by state-owned enterprises. They invest in big projects, not because they're great ideas financially, but because they make the GDP figures go up in the short term. And even private companies have to take CCP policy into account, because they have CCP boards in their company structure that can override company decisions. But, as it turns out, the CCP has made all kinds of mistakes when they try to control the economy and investments. Over the years, there have been all kinds of inefficient investments that really serve no purpose. The Chinese real estate market is by far the biggest example of this. It's valued at about $130 trillion, and is one of the biggest contributors to economic growth in China. At its peak, the real estate sector was about 1/5 of China's GDP. And this didn't happen by accident. Local governments pushed for a ton of new real estate projects, just to boost their GDP figures on paper. They allowed property developers to go massively into debt to buy land. These developers were even allowed to sell homes before they were even built yet. But building houses just to make the GDP figures go up is bound to go wrong. China has overbuilt houses by the millions. The most extreme estimates are that China has built enough homes to house 3 billion people. Officially, China's population is 1.4 billion, less than half of that amount. And that population figure of 1.4 billion is probably massively inflated by the CCP, so the real housing bubble is even bigger. And the bill is coming due. In 2021, the first cracks started to show with property developer Evergrande defaulting on its debt. The crisis quickly spread to other developers, like Country Garden, because trust rapidly evaporated. The problem was so big that it threatened to take down banks who gave loans to these developers, which would put China in a horrible economic crisis. To tackle the problem, the CCP bailed out real estate projects and is now spending $280 billion a year just to buy up all the excess properties. In this way, the terrible real estate bubble could lead to a couple $1 trillion of government debt. The average person in China might not notice this immediately, but it is unsustainable. The same goes for roads and railways. Over the past 15 years, China has built around 75,000 miles, or about 120,000 kilometers, of highways. That's nearly half of the US national highway system. They've also built around 400,000 bridges during this time. And since 2010, China has added 40,000 miles, or 70,000 kilometers worth, of railways. These infrastructure projects cost hundreds of billions of dollars, and they're one of the biggest expenses of the Chinese government. But that seems great, right? Aren't they helping their people and investing in the future of the country? Well, that argument doesn't take into account the flip side of this. You see, building infrastructure is only smart when it's actually useful. And if you just build for the sake of building, that's not gonna work out. Many brand new train stations in China are shutting down because not a lot of people are using them and they're operating at massive losses. These projects have cost a lot of money, but they're not returning anything. With its massive infrastructure expansion, the CCP has tried to create an illusion of prosperity and growth, but they completely ignored how the economy actually works. And real estate and infrastructure are far from the only areas where the CCP messed up with investment. It's also true for manufacturing, another pillar of the Chinese economy. Through its state banks and its state-owned enterprises, the CCP invests a lot in factories using government subsidies and cheap loans. Manufacturers also get a lot of tax incentives. This policy is not meant for the domestic consumer market. Instead, it's geared towards exports. The CCP does this on purpose because it wants to take over manufacturing from other countries to get a huge trade surplus. China is exporting way more than it's importing, which is one of the drivers for its economic growth. Steel is one of the biggest examples of this. For years, China has been giving cheap loans to its steel manufacturers and pushing them to massively expand their steel mills. As a result, China now makes more than half of the world's steel. But other countries don't really like this, and that's where the problems start to emerge for the CCP. That's because China's export economy could go from an asset to a liability if exports stagnate or fall. In 2024, China exported $3.6 trillion worth of goods, which is equal to about 20% of GDP. Tens, if not hundreds of millions of Chinese jobs wouldn't exist without this. 16 million Chinese jobs are directly dependent on US exports alone. If the CCP didn't aggressively invest in an export economy, China's economy would be more balanced with more domestic consumption. But now they're making all kinds of things that domestic buyers would never buy. An obvious example of this is textiles, where China makes about 20 billion pieces of clothing a year. Chinese consumers could never consume all of this. There's a similar problem with household appliances, of which China exported 4.5 billion units last year. Unless Chinese households are going to buy a new fridge and a new washing machine every year, they could never buy this much. And with electronics, there's a similar export dependency. China made 1.7 billion phones in 2024, but it exported more than 800 million of them, or about half. China also made 340 million laptops, but it exported 143 million of those. China made 4.5 billion chips in 2024, but 3 billion of them were sold overseas. And China is going down a similar path with renewable energy. It has become the largest solar panel manufacturer in the world. They're making almost double the amount that they need at home. Now, this is all great if these exports continue, but other countries like India and Vietnam will try to take over their share of manufacturing. And the countries China is exporting to don't like their dependency on this authoritarian communist country. And when exports decline, like they're doing now, Chinese companies and employees are going to get stuck because their economy was built around exports by design. It's going to be very hard to replace that with domestic consumption because they don't have a lot of it. But before we go into the modern-day economic problems that are caused by low spending and bad investment, it's worth taking a look at China's debt problem. Because as we mentioned earlier, most of the savings of Chinese households has been loaned out by banks. They largely went to these real estate, infrastructure, and manufacturing projects. But the problem is that these projects are failing, and that the debt might never be repaid. Now, debt in China is complicated. If you look at the country as a whole, China has some of the highest debt levels in the world. Total non-financial debt in China, basically debt of households, companies, and the government, is at 312% of GDP. A big part of this is the government. The national debt, which is the debt of the government as a whole, was 88% of GDP in 2024, and it's climbing very rapidly. It will hit 100% of GDP by 2026 due to sky-high government deficits. This has to do with the general economic crisis that we'll cover later. But these figures don't give the full picture of government debt, because in reality, it's much bigger. For years, local governments have relied on local government financial vehicles, or LGFVs, to hit their growth targets. That's because, before 2014, they weren't allowed to issue debt on their own. But the central government in Beijing also didn't give them enough money to hit growth targets. Ever since 1994, all the tax revenue has been going to the central government, and local governments had chronic budget deficits. So, instead, local governments found shady state-owned companies that took on projects in their name. These companies were allowed to borrow money from banks and from households, and with that money, they took on real estate and infrastructure projects with the backing of the local governments. These LGFVs were also some of the biggest buyers of land, and all that money from land sales was a big revenue stream for local governments and for corrupt CCP officials. However, the LGFVs were becoming a major problem, because their debt was getting out of hand. That's why the CCP reformed the budget system in 2014 and allowed governments to lend money on their own. The LGFVs are now highly scrutinized, but it's already too late. Combined, the LGFVs have up to $10 trillion in debt, more than half of China's GDP. If you add up the central state and the private sector to this, you'll get one of the worst corporate leverages in the world. Corporations hold about 160% of GDP, or close to $30 trillion, in debt, doubling that of the US in relative terms. During COVID, this almost went wrong, as many corporations were about to collapse. That's because their projects weren't financially feasible. The bottom 90% of state-owned enterprises are in a bad spot, because they hold 45% of total corporate debt in China, but only have 15% of the earnings. These are mainly the local companies we talked about earlier in industrial, construction, or real estate. In the private sector, there are also problems now, because local governments also allowed them to get a ton of irresponsible leverage as well. But when the economy was struggling during COVID, these companies suddenly didn't have the revenue for their debt payments. And ever since during China's economic slowdown, these companies have been struggling. The CCP is kicking the can down the road, ordering state banks to give low-interest loans to these banks. But long-term, this could never work out. China's high investment was supposed to drive wealth creation. But this is definitely not happening. So, with investments going sideways and spending at incredibly low levels, China is in a weak spot. It has the perfect ingredients for a so-called debt deflationary spiral. When people don't spend a lot, there's a risk of deflation, which means that businesses have lower prices to sell their products because there's just not enough demand. This doesn't sound so terrible because lower prices seem great for consumers. But in combination with high debt, it can be lethal. Because deflation means revenues for companies go down, and that means indebted companies get in trouble. They don't earn enough money to meet their debt payments. And when companies default, it hurts employees. It could also mean that banks don't get their money back and that people lose their savings. This hurts spending in the economy even more. In turn, the debt situation only gets worse as revenues of companies deteriorate, and then the economy enters a vicious cycle of deflation and debt problems. And this kind of problem is not just theoretical. It has happened many times in history before. In the US, there was a debt deflation problem during the Great Depression from 1929 to 1933. More recently, it happened with countries like Greece and Japan, with Japan giving the worst example of what China's future could look like. Because a debt deflation crisis can be the beginning of the end for China. And the bad thing for China is that they're very close to a debt deflation spiral. Ever since 2023, consumer prices have stagnated, and manufacturing prices are already going down due to export weakness. But the Chinese government tries to avoid this debt deflation spiral at all costs, because a severe economic crisis would undermine the power of the CCP. That's why they've been lowering interest rates a lot, to boost the economy. Low interest rates means it's easier to lend money and spend. On top of that, it bails out companies and governments that are struggling with heavy debt, because debt gets cheaper. But interest rates are not the only tool the CCP is using. More importantly, they've been printing a lot of money. China's government is running at deficits of about 8 to 9% of GDP, and it's adding hundreds of billions of dollars in government debt annually. This government support is the biggest reason why China hasn't entered a debt deflation spiral yet. Without it, China would already be in a severe crisis right now, due to low spending and terrible investment. Although the US isn't doing much better at the moment in terms of government deficits, it's not a healthy way to run the economy. Ultimately, consumer spending in China needs to pick up if they want to have sustainable economic growth and make the debt situation more manageable. With higher consumer spending, growth doesn't rely on centrally planned investment programs. It also means the companies get more revenue, which is what drives economic growth in the end. But it's very hard to solve the spending problem. First of all, not enough money in China actually goes to households. You'd think that in a communist economy, people would get an equal share of GDP, but that's far from the truth. China is just about as unequal as the US in terms of income and wealth. Marx would not approve. The only difference is that in China, only 60% of GDP goes to the disposable income of households, whereas this is 77% in the US. The reason is that the state controls the economy through state-owned enterprises, and they make a lot of money that's not going to ordinary families. Instead, it's being saved up for these investment goals we've talked about earlier. In China, the official GDP per capita is about $12,600. That's probably an inflated number, by the way, because those data come from the CCP. But it's still way higher than the average disposable income at just $5,700 a year. And the median disposable income is even lower than that. That's basically the level where half the population earns more and half the population earns less. In China, it's only 35,000 yuan, or about $4,800 a year. So it's not only that Chinese citizens just like to save money, which they do, it's also that they don't earn enough to spend a lot. And this is actually the CCP's fault. With their heavy focus on investment through banks and state corporations, they've neglected wages for ordinary people. They've prioritized cheap labor for exports above having ordinary people earn more. Also, through state intervention in the economy, corporations have only gotten bigger and more powerful. In the end, the CCP became what it wanted to fight. They now lead a country with just as much inequality as the supposedly evil capitalists. And ironically, the Chinese economy is now more dominated by capital than the modern capitalist economies. So much for the Chinese Communist Party. The solution is pretty simple. The state would have to give up control by removing state-owned enterprises that soak up investment and by selling its stakes in the big banks. They would also need to stop having these centrally planned GDP goals and investment strategies that don't work. Without state-owned enterprises, the economy would become way more efficient. Also, this low consumption problem we talked about wouldn't be an issue. If people chose to save money, banks would give it to companies that are actually functional and create wealth. People could even invest their money in companies to buy shares and get way higher returns on their savings. Also, a free market economy would lead to tons of growth, not only on paper, but for ordinary households. Wages would finally catch up, allowing people to spend more. So less state intervention is really the only medicine for China's chronic problem with low spending and its economic problems in general. But the CCP would never turn to the solution, not in a million years. The party likes its control over the economy because it guarantees power. It doesn't want private companies and average citizens to become too wealthy, to prevent them from having a say in politics. But in order to gaslight its citizens, the CCP always wants the numbers to go up. So the CCP will just continue printing more debt and expanding its state-owned enterprises until its grand economic project will inevitably fail. Thanks for watching.
YouTube is growing so fast that it has just overtaken Netflix to become the most popular app on TV. That's just on TV, by the way. If you combine TV, phones, computers, tablets, people are spending an insane amount of time watching YouTube. This is exactly why YouTube is paying creators $45,000 per minute. That's $64 million every single day. So, if you have ever thought about starting a YouTube channel for yourself, now is the perfect time. And if you're looking to learn how people grow on YouTube in 2025, like this guy who got millions of views in just few months of starting a channel, then I have a solution for you. This weekend, I'm holding a free bootcamp for beginners where I will share all our YouTube advice and answer any question you have about growing on YouTube. If you're interested in learning from this bootcamp, you can sign up by clicking the link in the description or scanning the QR code on your screen.